Hi, this is Chris Buss with Traders Profit Compass with a mid-session update for Wednesday, September 2nd. It's coming up on the noon hour, and I thought I'd take a few minutes to do a quick run through. We have had some excitement this morning. Not all of it good, but that's the way it goes sometimes. So let's look at SPY. 30-minute chart. Thus far, SPY has tested the opening gap and has held it. So far so good. Be concerned or expect further downside if this gap support fails here. I'd expect a move, down into the mid 352s and possibly down in here to the mid 351s if things fall apart. But thus far, it's been a successful test, and as long as it stays above, things are okay. Moving on to the Qs. Bad liquidation break, gap and crap, whatever you want to call it. We had that divergent high. We had the pre-market run up, and they flushed it hard right out of the opening. Filled that big gap that was there. Had an opening bounce, but now it's rolled over. The good news is our trend line has held. This 298 has held. If this fails, if this 298 and this trend line fails, then you're probably going to see a quick move. There is a little bit of support here at 296.74, but I wouldn't expect that to hold if in fact this breaks. May not be today, maybe tomorrow. Maybe this holds for a while and we get another bounce. But obviously tech, has come out of favor quickly. It hasn't been a disaster so far. It did hurt some of our positions. I'll get into that in a second. But thus far, the gap up failed, and now we're back in the up channel. But as long as that holds, the Qs can keep it together. Be concerned if that breaks down. IWM, wow. Look at that liquidation, massive. But anyhow, came down and has bounced. So we're above this prior high. As long as that holds, I think anybody that bought down here with this great trade location is in good shape. Hopefully you didn't buy the opening tick, but as it stands now, still looking for a push up towards back up towards 158. If this 157.25 ends up failing, come back down here for another test of the prior resistance, which is now support at this 156.50 zone right in here. TLT, big up day. We talked about this 164.70 this morning as a go, no-go long level. So right now the door is open for a push higher to 167. I did see some bullish order flow in the option market this morning. And think about it, if there in fact does come a more substantial equity sell-off, I would expect TLT to rocket higher. And I would imagine, I haven't researched this, but the bond bears, and I was part of it, see this big bear flag that ended up not playing out fully. Everybody talking about higher interest rates, blah, 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 that was going to crater bonds. Didn't happen. They reversed it. So this was probably a crowded trade. TLT short. And, of course, when that happens, they go the other way. So now anybody that's long can certainly stay long against 164.70. We really don't want to go to the gold trade. Stronger US dollar, bad news for precious metals, and they've pulled back today. Moving on to tech, quick run through the FAANGs. Facebook, baby breakout that failed back in the consolidation triangle. Things would get more serious if this 292.30 were to fail. You can see that we did have a candle, test it, and it bounced and held. But there's a lot of open air down here. If you're an active trader and tech starts falling apart, that would be, a nice short, I would think, on a break below, looking for a move back towards 280. Not saying it's going to happen, but from a technical perspective, this is support, and you don't want to see that break if you're long. And if you're poised and you're ready, and we start seeing the Qs and big cap tech fall apart, that would be a trade I wouldn't be afraid to make with a stop just above. In the option market, haven't seen anybody shooting against Facebook, so the institutions are not, at least at this point, shooting against Facebook in any kind of meaningful way. So I think right now it's a neutral setup. If tech regains its footing and breaks back above this bull flag, I still think you can take it long if it looks like the Qs are stabilizing. We had held 135 overnight. That looked great until 9:31 this morning, and they sold it fast. When you're in short-term, weekly anything, whether it's puts or calls, and it goes against you like this, break of support, break of the trend line, there's no easy way to say it. You're basically dead. I don't think you sit down here and just, hope and pray that it bounces. I think you just take your loss and move on. Like I said, looked like the greatest call in the world at 9:29 this morning. Didn't play out. We still ended up making money on the entire trade, just not as much as we would have had we, of course, just taken our 60% win and packed it up for the night last night. But that's all hindsight. It is what it is. That was a losing trade, obviously. Amazon, it too sold the opening gap, but has found support here at 3,500. Tested below, look below and fail. So as it stands now, the bulls are still okay, especially if you bought from lower levels. But I wouldn't want to see 3,500 break. That would open the door back to 3,450. So I don't think that's one I would personally want to short. Right now, I'm not in. I want to see tech kind of stabilize, even though this has held the line. If tech falls apart in general, that would probably fail. I did try a long here this morning on Microsoft on the break above 230. That failed, so I'm out. Was not able to hold the line at 230, so I'm out of that trade. Google looks like the best of the bunch. It held its line on the gap and is moving marginally higher. So anybody that was in that is still looking good. Netflix, same as our Apple trade. We had gotten this big gain up here. I think anybody that took the trade down here at 520 rode it up to 555. We rolled last night, booked a lot of profits, and stayed long. That trade didn't work, so we gave some back. That's trading. Moving on. Finally, we got Twitter to break higher. It's up 4%. So that patience paid in that little flag formation. I have seen some decent call order option flow, both near term, in the next 2 weeks, but also I saw some January 47s and 48s going off. So folks are looking for more upside in Twitter. We're in the September 41s, I believe. So they're looking good right now. So that one's working. Chef, not so good a trade. We're sitting in September 17s, I believe. So we're a little underwater. Hopefully this can make a move higher. Intel, as I sent out in the note this morning, just recently, tons of call buying as price moved into this huge gap from earnings. It's been quite a while ago, a month and a half ago. Huge upside gap. I'm looking for this to hold the line here and make a move higher in the weeks ahead. I'm positioned in September 11th, 52 calls. So, I'm right here at the money. I want to see a move higher. There's a lot of bull order flow behind it. I hope that plays out. I've got my stop set. If it doesn't work, it doesn't work. I just didn't personally want to buy a bunch of time on this one just because of tech in general. If tech would have been strong and I had a little bit more confidence in tech in general, I probably would have bought more time. So this is a relatively cheap shot to see if we can get a push. And surprisingly, if you look at semiconductors in general, the SMH, it's up nicely today. So it seems to be contained to the mega cap names. So we'll see if this one plays out. We're in Visa, not really doing anything, not hurting us. We had got this run up from 200 to 215. We rolled higher. We're sitting in September 215s, so it's got to make a move. It's not really hurting us at the moment. It held its all-time high, which is good. Now we just got to get a push, and we'll probably need the broad market to give us a lift in order for that to happen. Dunkin' Donuts, nice move today. We were in this from down here on the breakout. We rolled higher. We're in this 77.5, 82.5 call spread for September. So that's finally starting to move in our direction. Still like it. Now, moving on to some new names I want to call your attention to. If you look at the casual dining space, it seems like everything is starting to normalize. As in, fade COVID, it's over. I'm not so sure that's going to play out, but I really do like how the charts are setting up. If DRI can pop this 90, it's already cleared the 200. It's got all the EMAs stacked up. If it can pop 90 into this void, I think it's got some good running room. And I think it could find, between 100 and 107 pretty fast. So I want to jump on that. So I've got an alarm set at 90. I want to see that pop through. I don't want to front run it because we don't know what the general market conditions are going to be. But if SPY stays strong and this pops, I want to jump on DRI. Here's another one, DIN. Another Casual dining, I'm not sure the brands they have. I think I don't know. I think Chili's and a few of the other ones. I'm not sure if that's Brinker or DIN. But anyways, same kind of setup as DRI. If it pops 65, I would be a buyer there. I think the DRI is a better setup. So if I had a choice, I would take this one on a breakout versus Dine, simply because of this void. And if you look at DIN, it doesn't have that. It does have some space here with these candles to fill this gap, but I think the DRI setup is better. But my point is, casual dining is working. Starbucks, Dunkin' Donuts, McDonald's, these stocks here, they all look like they're poised to make a move higher, and I want to participate in that if in fact they do break out. Snap is one that I want to call your attention to. We've got this triangle breakout working. Massive, massive, massive amount of call buying, both short term over the next couple of weeks, looking for like 24 and a half. I didn't see the news flow personally, but I did hear through the grapevine that they had a record number of app downloads in the prior reporting period. I don't know if they do that monthly or quarterly, but that's what I heard through the grapevine. You can double check the news flow if you care to. I'm not in the name, but I do like the setup, and I'm kind of watching it closely here. If you're looking for, a potential long idea, this one has a lot of money behind it. The last time I checked, it was over 1.5 million in call premium, with close to 2.5 times call buying in the name. So a lot of people are looking for more upside. It looks like a nice setup, and it's one worth taking a shot, in my opinion, if you're looking for a pretty tight setup. You could stay long against 22 and a half, something like that, the low of the day, and see where it takes you over the next few weeks. You could go out. I wouldn't do anything crazy like Friday, but if you wanted to look out to September 11th or even September 18th call expiration, I think those have a good chance of working. So I would endorse that that idea. That's all I have for you this morning. I hope you liked the content. I hope that refreshed your outlook on where the index is and some of the other FAANG stocks go. We really need to see if big cap can stabilize here and hold the line. If not, we're looking, at more downside on the Qs and big cap tech in general. So subscribe to the channel if you haven't done so already. I'd love to feed you compelling content and keep your inbox full of ideas. Check over in the show notes for links to the blog and how to register for my content to get it in your mailbox each and every morning and throughout the day. This has been Chris Buss with Traders Profit Compass. Have a good rest of your trading day, and talk to you next time.